Welcome back to another video, and this one is going to be about Beyond Meat stock. This is going to be a very different video than I thought it was going to be because I don't know what Beyond Meat is trading at right now, but this thing is shooting up to the moon this week. I was expecting to make a video about how I'm buying the stock, but now I don't know if I want to touch it, so my whole script is just all thrown off, had to redo it. I don't know what it's trading at right now. It might be trading at like $120. I don't know. Put it on the screen right now. But my agenda for today is as follows. What is this company? What is their product line? And what do I think about their product line? What is their story as a company? What are the good things with regards to this stock? What are the bad things with regards to this stock? What are the growth projections with this stock? I'm going to go over whether I'm buying it or not and my allocation if I decide to buy it. And I'm going to go over the market capitalization at which I'd like to buy this stock. So firstly, let me just address the elephant in the room, and there is a vegetarian in the room. So that's me. I am not the type to just throw this in people's face, and people kind of just realize a pattern after a while. They're like, this guy doesn't eat meat. I used to be that very vocal vegan back in the day. You know, I was that guy to go and punch everybody's fork out of their hand and everything. But anyways, that is not the purpose of this channel. This is a finance channel. But let me just get into the product. The product, they've got fake chicken, they've got fake pork sausages, they've got fake hamburgers. And honestly, in my opinion, they're completely indistinguishable from the real thing. That may come from a place of ignorance just because I haven't had the real thing for so long. Maybe I just can't tell anymore, but if there's any vegetarian out there that will admit that they love meat, it is me. If you're interested in learning more about the health aspects of it, I would definitely recommend these two books that I'm about to show you guys on the screen. And that is, for the first one is Proteinaholic. I hope you guys can see that. Maybe it'll focus in on there. It's a book about basically how we don't need as much meat as we've been told that we need. It talks about the animal agriculture industry a little bit. And this one is not the China study, but you'd have to read the China study to get the studies. Basically, it's a study of the Chinese diet, the Oriental diet, and it talks about how eating a more plant-based diet is just good for human health in general, leads to better health outcomes. I'm going to read you a quote from their website that says why a Beyond sausage is a little bit more healthy than a regular sausage, which, let's be honest, that's a pretty low bar to jump over, so neither one of them, in my personal opinion. If you're trying to get healthy, you shouldn't be eating sausages of any kind, but if you're gonna do it, maybe do it to a lesser extent. So some of the benefits that they cite are more protein and iron, 44% less saturated fat, 50% less total fat, 37% less sodium, no cholesterol, which is something that your body does not need, and it just heightens your risk of atherosclerosis. You should look into cholesterol if you guys have any time or are interested. Cholesterol, your body does not need it, your body produces it. And it's just a risk marker for heart disease and atherosclerosis. Now, a lot of you guys out there might be thinking, what qualifies me to say this? The guy who talks about money on the internet. And I told you guys that I went to college. I never told you what my major was. My major was biology. So for all you people out there that like to see expensive pieces of paper, that's what my money was spent on, as an expensive biology degree. But anyways, let's get into what this company is and what they do. This is coming straight from their corporate profile, and it is as follows. Beyond Meat is one of the fastest growing companies in the United States, offering a portfolio of plant-based meats. We build meat directly from plants, an innovation that enables consumers to experience the taste, texture, and sensory attributes of popular animal-based products, while enjoying the nutritional benefits of eating our plant-based meat products. Our brand commitment, eat what you love, which that's just a weird slogan to me. Most people love their dog and their grandma, but anyways, I digress. Represents our strong belief that by eating our plant-based meats, consumers can enjoy more, not less, of their favorite meals, and by doing so, help address concerns with human health, climate change, resource conservation, animal welfare. The success of our breakthrough innovation model and our products has allowed us to appeal to a broad range of consumers, including those who typically eat animal-based meats, positioning us to directly compete with the $1.4 trillion global meat industry. So that is a key theme that we'll hit on later, is the $1.4 trillion global meat industry. When you look at a stock that's growing at this pace, you have to really just pay attention to what is the market opportunity. And the market opportunity for them is in the multiple billions of dollars. So even if they don't make it to a $1.4 trillion, I don't see everybody just adopting plant-based diets. They will still be able to capture a very large market if they're able to grow and dominate this space. And one thing that I know personally, just from the reading that I've done and from just my experience and being deep in the science, is that This is not a fad diet. This is not your keto diet. A plant-based diet is just a diet that's good for human health. And quick disclaimer, I'm also not one to say that absolutely zero meat is the only healthy diet for humans. I just think that the American diet right now has far too much meat in it, and there is no studies to suggest that having a small amount of meat is actually adverse to human health, just because that is a study that hasn't been conducted. And I doubt that with a mostly plant-based diet with some meat, that there would actually be health effects to the adverse. But if you're doing something like eating a completely carnivore diet and you're just slamming yourself with a bunch of meat and fat, there are some studies that show that that is not a good thing. So let's take you guys back in time, back to the IPO. The IPO IPO'd at $25 and then it shot up to as high as $239. And that kind of scared me. That scared me away from the stock. And a lot of people came at me like, dude, why aren't you buying this stock? Their stock is just shooting up in price. You're gonna miss the wave. And I said, you know what? I'm gonna miss the wave because I do not want to be on that wave. The wave that I rode was when I first started investing back in 2018. I rode the Tilray wave, and I rode it all the way up to $300, and I rode it all the way down to like $120. I might show some screenshots on the screen right now. That was a big lesson that bubbles pop. And in Beyond Meat, that was a huge bubble, and it popped and then it leveled back out. But there actually is a real story behind Beyond Meat. In the cannabis sector, I feel like there's a little bit less of a story as far as the market opportunity. I think that they have a lot of work to do over there. As far as plant-based diets catching on, they're already catching on. In Q3 of 2019, Beyond Meat finally recorded their first positive net income. So this is a stock that IPO'd at $25 and it immediately shot up to $200, which was insane. A lot of people were asking me, dude, why aren't you hopping on this stock? This thing is just gonna go up and up and up and up. And these were typically people that were messaging me that do not pay attention to valuations. They are in the other school of thought. There's kind of two schools of thoughts when it comes to stock investing. Some people pay attention to the chart and what the market is thinking. They try to get into market psychology. And the other people pay attention to the value of the actual share. I tend to lean towards the value of the actual share. I have read a lot of trading books about market psychology, but a lot of the logical fallacy that I see with market psychology is that if you're looking for these little patterns and everyone else is looking for these same little patterns, then aren't people just looking at the same thing? I mean, isn't there a diminishing return when you're all looking at the same thing and thinking that, oh, you know, if you guys are all looking at the same thing and you're making the same type of moves, don't those patterns eventually have to change? There's actually this funny section in this book called A Random Walk Down Wall Street where this guy flips a coin and then he constructs a stock chart based on it. If it was heads, it goes up. If it was tails, it went down. And he gives it to this trader, and this trader's like, oh man, we got to buy this stock. That's a bullish sign. And then when he tells him that it was just a coin flip, the trader gets a little bit embarrassed, as he should be. But I think that there's a little bit to market psychology. I mean, when you get that gut feeling when your stocks are dropping, you can assume that everybody else is feeling kind of similar and know, you know, kind of when you should buy, but I don't pay too much attention to it. I like to look at the projections as far as the forward PE. Forward PE on this stock, as the last time I checked, is 251. So it's getting a little bit ridiculous. When I was going to make this video, it was at about 200, but we will see where it goes. I wanted to buy this around 75, which is where I bought $100 worth of the stock, but it has trended to astronomical levels. Is at $97 last time I checked. October 28th, there was a lockup expiration. The stock crashed from $105 down to the $82 range, and then it just kept on going down. Moving you into the recent past, they've started conducting tests with restaurants like McDonald's, I'm sure you've probably heard of them, Kentucky Fried Chicken, Subway, and they rolled out breakfast sausages in 9,000 Dunkin' locations. Q3 net revenues increased by 253% to $92 million. They've grown their distribution locations to 58,000 outlets, and as an avid consumer of their products, I can definitely attest that I'm seeing it in more and more and more stores. So it used to just be like I had to go to Whole Foods and like spend my whole paycheck. I would walk out of there with a $70 bill and 3 pieces of bread. But now it's like I can go to Safeway. I don't know if they have those in the other parts of the United States. I can go pretty much anywhere. I can go to Walmart. You can go almost anywhere. I wish they would get them at Costco so I could start buying in bulk. because I love my Costco. Another thing of note is that they posted a 12% increase as far as their market share in the plant-based meat category, and as that category itself grows larger and larger as a portion of the American diet, which it is growing, we'll talk about that a little bit later. As long as they can keep that huge market share, they are going to be a huge company, a huge force. So I'm planning on holding this thing for the long term. I'm not planning on selling this thing for like a 50% gain or anything. I plan on holding this thing for a very, very long time. So Subway, they have teamed up with Subway and they're making the Beyond Meatball sandwich. I'm not sure exactly where that's rolled out, but they have rolled it out in certain locations. They're testing it out. If you haven't heard of Subway, I really don't know where you live, but Subway is the world's largest restaurant by number of locations. What the f***? Can you guys not? I'm trying to record a video, yo. They teamed up with a KFC in Atlanta, and people bought more Beyond Fried Chicken nuggets than guests typically buy of popcorn chicken within a week. Within 5 hours, they sold out. So that just demonstrates a very heavy demand for the Beyond Chicken Nugget. That is ridiculous. Here's how I see the plant-based products. In my mind, I think that a lot of people would rather eat a plant-based diet than eat an animal, but they're just like, this thing tastes so much better than this thing, and I don't care that much. But if you make all things equal, let's say that this thing tastes exactly the same as this thing, and this one is an animal and this is not an animal, people will choose the non-animal. If price is the same, make all things the same, people will choose the non-animal to eat every time. So I see a huge market opportunity because of that, and you see the demand for it even in a soul food loving place like Atlanta. So one thing that you could say is a good thing, or you could say it is a bad thing, is that they've recently had some shakeups in their management team. So recently they just got Sanjay over from Tesla, and they got Stuart Cronog over from Coca-Cola. Under her leadership, they were able to grow the sales of much smaller size cans, and they were tuning into the change in the consumer taste. So a lot of people don't like to see new management teams or shakeups in the management teams, but I think that Sanjay coming over from Tesla and that Stuart Cronog coming over from Coca-Cola is actually a good thing for Beyond Meat. People don't necessarily like to see a new CEO and Ethan Brown at the helm when you're talking about a company that is new to the public markets, but I really like the guy. Just looking at interviews of the guy, I really think I can trust this guy, and I think he has a good head on his shoulders. So a huge tailwind in this stock is brand loyalty. So a lot of people do not like to support companies that basically do things that they do not like. So a lot of people that are in this for their ethics, they will not want to support a Hormel Foods or like a Tyson's product because they are in it for the ethics and they do not want to see these animals dying or the environment being destroyed for animal-based agriculture. So a lot of these people, for the same reason that a lot of people buy Teslas, is the same reason that a lot of people buy Beyond Meat products, because they feel strongly about the mission of the company. So let's get into some of the bad things. We've been talking pretty positively about this stock, but not everything is pie in the sky, but that valuation is pie in the sky, and that is the first bad thing. The valuation on this thing as of recording it is a 251 forward PE. You want to look for something that's under the industry average, but honestly in this space there really is no industry average. I mean, you could look at the PE of like a Hormel or a Tyson Foods, but there really is nothing to compare this company to because of how fast the growth is. So people are basically pricing this thing so far out into the future because it's such a new technology that people are not sure how far it's going to grow. So it's very speculative. I would not recommend this being somebody's cornerstone of their portfolio, but I do think it has a place at 2% in my portfolio. So that's what I went ahead and did. I went ahead and bought in. I put about $100 towards it at 75, and then the thing shot up, which is not what I invest in. I wanted it to just kind of stay there until I had a little bit more money. I don't get paid until next Friday, but hey, it is what it is. Made a $25 profit that I did not want on this stock, but we'll see where it goes in the long term. Basically what I think about when I go to construct my Roth IRA is which one of these companies do I think is still going to be relevant when I go to take some money out around 60 years old. So risk number 2 is commoditization. So the risks that are in Tesla are kind of the same risk that are also in Beyond Meat. If everything's as good as Beyond Meat in the future, then Beyond Meat's not special. If everything's as good as a Tesla in the future, then Tesla's not special. So you have to realize that you're taking on that risk. So will this thing grow into the future? Right now, given the story, yes, it's going to grow huge into the future. But if other people start to catch up and other people start to make products that are just as good, Right now, they're not even close. That stuff is usually disgusting. I'll be the first to tell you. They're going to grow huge into the future, and so is Tesla. And lastly, they are projected to be profitable, but there is really no way to know how profitable this company is going to be. They're projecting 38 cents as of the last time that I checked, but that could be way high or that could be way low because they're investing so heavily into their growth. And really, when you're investing in a company like this, you don't necessarily invest in it for the profits. You invest in it for revenue growth, because a lot of what would be profit, you just want them to invest that back into improving the product, improving their distribution, and just becoming a giant company. That's what you want them to become. And then they can focus on cost reductions and getting that capital back to the investors. Financial results. Q3 is supposed to be their strongest quarter, just because think of when Q3 is. Q3 is right after the growing season, and this is a plant-based company. So all of the plants that are coming out of the ground, they're coming out around Q3. They're expecting a year-over-year growth to 265 to 275 million. That would be a year-over-year growth of over 200% in 2020. This growth is supposed to be driven by new customers and greater demand from existing customers, which I can attest to directly, because when I first started going to get these products, you would go in there, you would see them, and then literally they would be gone the next day, and they would be gone for like 3 days, and you'd have to come in, and then you would see like a bunch of them, and then literally the next day you come into the store, it's all gone. So stores have kind of caught on that people have demand for this product. So now you go in there and it's actually stacked up. There's a ton of them. They're starting to have bigger orders, and all those bigger orders, that's more sales for Beyond Meat. Revenue trends. Their retail revenues are up 212%. Restaurant revenues are up 312%. And like we said, if that McDonald's deal happens, which they're apparently testing in 52 Canadian McDonald's right now, the Beyond Meat products, that would be huge for them. If Beyond Meat can become an extension of McDonald's, that would be just ridiculous, parabolic growth. This growth in revenues is driven primarily by their fresh product line. 265% growth has been seen in the fresh product line, and they recently adjusted their guidance on EBITDA from EBITDA positive to 20 million in EBITDA. I'll put a definition of EBITDA on the screen for those of you guys who did not know. You can pause the video. Another thing that you'd love to see here is that in 2019, gross profit went up to 35.6% of net revenues from 19.2% of net revenues in 2018. So their profitability is increasing over time. Basically, more of their revenue is being converted to profits. More of their revenue is being turned into profits, even as they're heavily investing into their business. SG&A expenses were down to 22.8% of net revenues from 39.4% of net revenues in 2018. This just indicates that they're becoming a lot more efficient with their process, they're reducing costs, and it's mostly due to scale. Their total current assets is about 102 million as of making this video, and their current liabilities is only about 24 million. Even their total liabilities is about 54 million. So from their IPO, even if they do become just cash burning machine, which they're not really burning it, they're investing their money, they still have a lot of money to burn through. So even if they're not profitable, which I think they will be profitable next year, they've still got a lot of runway in front of them because of their balance sheet. So anyways, just to conclude everything, this has kind of been all over the place. I apologize for that. But these are the numbers that I've been looking at. I think that the story of the company is intact. I think that it is a good long-term hold. Depending on your time horizon, this may or may not be a good stock to hold for the long term. In my opinion, I always plan to hold stocks at least for 5 to 10 years. That's just my plan when I buy them. That may not be the case. Maybe something terrible happens with the company, but as long as the story stays consistent to what it is right now, I think this is a good long-term buy and hold. Additionally, I don't think this is something that somebody should make a huge position in their portfolio just because it's going to be so volatile. I've only allocated 2% to it, and I'm just going to keep on buying in regardless of the price because I believe in the company and I want to own it long term. And I think that 40 years from now, this company is going to be worth a lot more money. So anyways, that's kind of my final verdict for the stock. I would make it a small position if I were you, but this is of course not financial advice. This is just for entertainment purposes only. So hopefully you guys liked the video. If you do, make sure you give it a thumbs up, and it really helps the channel grow. Channel's been growing really nice, and it's because of all of you guys always commenting down below, always hitting the thumbs up button, and I just really appreciate it. It's been crazy just seeing this channel grow, and a lot of people just clicked off of this really sentimental rant, so I'm just gonna go. I'll see you guys in the next one.